How do the markets interpret this? How should they be interpreting this?
So first of all, they're not particularly bothered, given how much we reacted to kind of these threats a few months ago. Sure, we've seen the euro a bit weaker, European stocks are a little bit weaker, but there's no dramatic reaction. Essentially, people have become kind of a little bit immune to these tariff headlines. We've had so many. And I think that's the right reaction. Essentially, we're going to care about implementation. And it's not that people are oblivious to this is a serious risk, but we have no real clue whether the risk is going to come through. We've now learned that the negotiation style, if we didn't know that in advance, is going to be very, very aggressive and hardline to the end. That doesn't mean a deal won't happen. It doesn't mean that nothing will ultimately be implemented. So I think people are saying we have to wait and see. And there's actually two layers of wait and see now. It's not just wait and see what the tariff will be, but it's wait and see what that will be feed through into the impact as well in terms of hard data. So I think the tariff story is something that's going to continue to be really, really dominant for many, many months, but it's not easy. I think the short term, this is going to be a bit of a negative for stocks. I think the move in the dollar higher will probably fade by later on in the week, because I think it's going to go back to a sell America trade, because what it's really emphasizing in the long term is the idea is that the rest of the nations have to slowly start moving, slowly is a key word there, their supply chains away from America and start aggregating to have other businesses that don't incorporate America.
Mark, do you think that this Sell America trade could come back if we see increased pressure from the Trump administration on Powell? We've seen that fact that he's opened up almost a new front against Powell, really eyeing these the renovation project to the Federal Reserve building. Are you thinking that's something that could return this Sell America trade?
I definitely, that's I think an underpriced risk out there if Powell gets removed. I think it's really important when you mention Sell America trade is Sell America trade is very different from American underperformance. So I think American stocks will underperform for many years, but that's actually in a bullish view of the rest of the world. Sell America trade tends to be focused more around the dollar, and it's about selling down their overexposure. It's not about abandoning the US. So I think they're two different trades. Sell America trade can only ever be tactical, can only ever be held short term. You've got the world's most profitable companies, you've got the largest economy in the world. You know, US has many inherent advantages, just the world's overexposed to it. So I think, yes, tactically we are due for another round of perhaps Sell America, prompted by these tariff headlines, prompted by the threat in Powell, but that is only a tactical trade. Longer term, US stocks underperformance is sustainable.
And longer term, you see further weakness for the US dollar, as you've discussed. We're seeing the upside for the greenback in the session today. If we do get the scenario, and you've talked about the fact it's so hard to know what is actually going to be implemented at the end of the day when it comes to tariffs. If we do get a scenario where we're getting 20, 30% tariffs on European goods and maybe countermeasures, what is the impact on? Does that continue to play into your story of dollar weakness? How does the euro function in that, particularly versus other crosses with some of its key trading partners? What are the prospects for the euro in that kind of scenario?
Well, I think actually that the bigger driver of FX will be the kind of slowly just reducing US dollar exposure at the margin. Again, the US will stay the world's reserve currency, the US dollar. It's not about abandoning it. It's just about reducing from the overexposure there. I think that's the bigger driver. So the euro will do well against the dollar. On crosses, I'm not particularly bullish the euro, but it does have the idiosyncratic fiscal spending story. And also, when you diversify away from the US, the first port of call is going to be the next most liquid market. So euro will benefit over the next year or two, and then people will start diversifying much further afield, like to Asian emerging markets, but that's the kind of 4 or 5 year trade.